These 5 assets will collapse in 2025. If I told you right now that 5 types of assets will drop sharply in value and lose significant worth in 2025, what would you think most people's first reaction would probably be? What kinds of assets are they? Do I own any of them? If not, they'd likely assume this has nothing to do with them. And for those who've never invested in any assets, they might naturally think that this story doesn't affect them at all, right? But if that's really how you're thinking, then I have to tell you, you're missing out on a huge opportunity. Because in investing, sometimes knowing what's about to go down is even more important than knowing what's going to go up. Let's take a closer look at this. Making money even when assets lose value. The mindset of great investors. Welcome to the path to prosperity. A place where you'll discover truths that society often keeps hidden from you. Many people believe that they can only make money when assets increase in value. But in reality, the opposite can be just as true. If you know how to take advantage of market shifts, you can make money even when things are going down. A lesson from the past. When everyone panics, the rich get richer. Did you know that one of the best times to make money is during a market crash? Let's take a look at history. During the global financial crisis in 2008, Warren Buffett bought up large amounts of stock while everyone else was panicking, and he ended up being one of the biggest winners after the crisis passed. Li Ka-shing, Hong Kong's richest billionaire, used the property market crash to buy up cheap real estate and doubled his assets when the market bounced back. Under President Donald Trump, the Dow Jones took 3 years to grow by 49%. But in 2020, it only took 1 month to drop by 49%. Those who bet on the market's fall made massive profits in just a few weeks. See, when the market crashes, most people panic and run away. But smart investors see it as a golden opportunity to grow their wealth. So instead of fearing bad news, learn how to turn it into your advantage. 25. A once-in-a-decade opportunity. Will you be a winner or a loser? Markets always move in cycles, up and down. And 2025 might be one of the years where several asset types experience their steepest drops. But that doesn't mean we should just sit and watch our wealth disappear. Remember, a great general knows how to use the battlefield, when to advance and when to retreat. He doesn't just charge blindly hoping to win, nor does he flee in fear just because the enemy seems stronger. So the question now is, will you be the general who leads the game, or just a skeleton swept away in the market's chaos? If you don't want to miss this opportunity, if you want to understand which assets are likely to drop in value and how to use that to your advantage, then keep following this channel. In the upcoming parts, I'll reveal the 5 asset classes most at risk of serious depreciation in 2025 and how you can turn that into a head start. Get ready, because this is a once-in-a-decade chance. Open your third eye. See the flow of global money. Before we dive into the specific assets that will likely lose value in 2025, we need to do something important. Open the third eye. You might be asking, what's this third eye? People only have 2 eyes, don't they? Let me explain. If you only use your regular eyes to look at the world, you'll only see what's right in front of you. But if you learn to see the flow of money, where money comes from, and where it's going, you'll start to understand the true nature of the market. And once you understand that, you'll be able to predict the future. The financial market is like a game of chess. To win, you have to know the rules. You need a new way of thinking to recognize opportunities in 2025. And that begins by answering one critical question. What is currency? Currency isn't just money. It's a verb. Most people think currency just means money. But actually, money is just money. It doesn't necessarily make it a currency. Why do I say that? Imagine you have a pile of money, but you can't use it to buy anything of value. What's the point of that money? Take the Zimbabwean dollar, for example. You might have 100 billion Zimbabwe dollars, but sometimes that wouldn't even buy you a loaf of bread. Remember the story from 2010, when someone used 10,000 bitcoins to buy a pizza. Back then, Bitcoin wasn't truly a currency, because it couldn't yet be widely exchanged for goods or services. Money only has value when it can be traded for something people actually want. A perfect example is the US dollar. Why can the US print so much money without its value crashing? Simple. Because the entire world wants dollars. And dollars can buy goods everywhere on the planet. You can use dollars to buy diamonds in Africa. You can use dollars to buy phones from Japan or South Korea. You've probably even seen in movies people using crates of US dollars to buy drugs, weapons. And that's why the dollar holds its value. Because America keeps printing it. But everyone still wants it. But what happens when trust in the dollar starts to fade? The first asset to lose value will be US government bonds. US government bonds were once considered the safest asset in the world. But in 2025, that perception may change. There's something that very few people are paying attention to. US government bonds are being sold off in the market. Currently, a US government bond is worth $100. But in the secondary market, it's being sold for just a little over $90, even though it still pays 5% interest. This is a warning sign of a looming crisis. In the past, the US could easily borrow money from other countries like Japan, China, or the UK. But now, these countries are reducing their holdings of US bonds. Let's think about this for a moment. If someone is willing to lend you money, you can borrow at a low interest rate. But if no one wants to lend to you, you're forced to raise interest rates to attract buyers. And that's exactly what's happening to the US right now. Remember, the higher the interest rate, the lower the bond's value. So if you're holding US government bonds, the value of your assets is gradually evaporating. The second asset losing value: cash, especially local currencies. Ask yourself, why are countries like Japan and China no longer eager to hold US bonds? Simply because they no longer trust the current monetary system. And when that distrust spreads, local currencies are at risk of sharp devaluation. Historically, many currencies have lost significant value. The Japanese yen once lost nearly 50% of its value against the dollar in just over a decade. The Argentine peso lost over 90% of its value in just a few years. The local currencies of many Asian and Latin American countries have also continually declined. So what might happen to weaker currencies in 2025? If you're holding too much local currency cash, you may be facing a hidden devaluation risk without even knowing it. Solution: consider holding part of your assets in dollars, gold, or more stable stores of value. The third asset losing value: financial markets tied to bonds. You might think that since you don't buy US bonds, this doesn't affect you. But the truth is, The global financial system depends heavily on U.S. government bonds. When U.S. bond values fall, many investment funds, banks, and financial institutions face major risks. This could shake the stock market. Real estate may suffer due to high interest rates. Investment funds will incur losses, affecting individual investors. Remember, when confidence in the financial system fades, it's not just bonds that suffer. The impact spreads across the entire economy. But why are countries simultaneously pulling away from U.S. bonds? Before discussing the next asset likely to lose value in 2025, let's pause and think. Why are countries like Japan and China reducing their U.S. bond holdings? The reason is quite simple. When a country buys U.S. bonds, it's essentially lending money to the U.S. But take a look at how the U.S. uses that money. It hasn't been invested in manufacturing or technological innovation. It hasn't been used to improve productivity or grow the real economy. Instead, the U.S. has funneled this money into financial giants and massive indebted corporations. In other words, it's using new money to pay off old debts. If you were a smart investor, would you continue lending to such a borrower? And when major countries no longer want to buy U.S. bonds, the inevitable outcome is falling bond prices and rising interest rates needed to attract buyers. But this leads to a ripple effect that harms other types of assets. The fourth asset losing value: dividend stocks and fixed income assets. Let's keep thinking like an investor. If you have $100, where would you invest it? A U.S. government bond now costs just $93 and pays 5% interest with virtually no risk. Or a $100 stock that pays $3 in annual dividends, a 3% yield. The answer should be obvious. If bonds are safer and offer higher returns, there's little reason to buy dividend-paying stocks. So what happens next? Stock prices must fall to boost their dividend yields and make them more attractive than bonds. If a stock pays $3 per year in dividends and needs to match a 5% yield to compete with bonds, then its price would need to drop to $60 instead of $100. The result is that even high dividend stocks, once seen as safe, could drop sharply in value. Those who bought these stocks for passive income will see their asset values shrink. Pension funds, insurance companies, institutional investors, and others who rely on dividend stocks will suffer heavy losses. And this means that in 2025, dividend stocks could become the fourth major asset class to lose value significantly. But wait, it doesn't stop there. The fifth asset losing value: commercial real estate. There's another asset class that's severely affected by shifting cash flows: commercial real estate. Think back to when the pandemic broke out. People worked from home, offices sat empty, shopping habits changed, and the boom of e-commerce left malls and physical stores deserted. Rental prices for commercial space plummeted, and landlords couldn't generate enough income to pay off debts. Now in the U.S., countless offices and shopping centers are vacant, with no tenants in sight. This has dragged down the value of commercial properties, and many owners can no longer repay their bank loans, leading to widespread defaults. Banks have had to seize these properties, but nobody wants to buy them. Banks are taking huge losses because the collateral has dropped in value. Keep in mind, banks don't just hold real estate. Their biggest assets are government bonds. And this is happening everywhere in China, Japan, South Korea. Now let's piece everything together. US bonds are losing value. Commercial real estate is losing value. Banks are being hit hard on both fronts. Doesn't this start to resemble the 2008 financial crisis? It's no coincidence that Warren Buffett sold off all his US bank stocks. He saw this risk coming long ago. And that's why commercial real estate is set to become the fifth major asset to lose value sharply in 2025. So, where is the money flowing now? In the past, the flow of international capital was quite simple. The US printed dollars to buy goods from China. China received those dollars and used them to buy US Treasury bonds, reinvesting them back into the American economy. The money returned to the US, allowing the country to keep repeating this cycle endlessly. But today, this cycle is starting to break down. Why? Because US Treasury bonds are no longer selling like they used to. Countries are no longer interested in buying them. They just want to hold cash. However, here's the problem. If you hold cash, but there are no goods to trade for it, that cash becomes worthless. It's like that time someone paid 10,000 bitcoins for a single pizza. So what does the US need to do? They need a new kind of commodity to keep dollars circulating. And that new commodity is US stocks. This is their latest tactic. Instead of selling you bonds, the US will now sell you stocks. Have you noticed lately the US has been continuously releasing positive economic data, especially job growth? They're working hard to project the image that while the rest of the world is struggling, only America is thriving. The US economy is booming. The American stock market will continue to rise. Why are they doing this? Simple. They want to sell you US stocks. They want you to believe that even if US bonds are no longer attractive, you can still invest in American stocks. They want you to think US stocks are the safest place to be. And that's why Donald Trump is pushing for US manufacturing growth, increasing investment, and cutting taxes for many small and medium-sized businesses. But here's the catch: Trump's policies are also causing major US financial corporations to see their stock prices drop. Stay sharp. Giants like Apple, Nvidia, Facebook, and Amazon already have sky-high valuations. There isn't much room left for growth. Trust me, when the US truly succeeds, it will give rise to a wave of new companies whose stock prices will soar rapidly. People like Warren Buffett, Mark Zuckerberg, and Bill Gates are consistently selling off their stocks. Warren Buffett now holds the largest cash reserve in history. Money is no longer flowing back to the US government. It's going into the pockets of big capitalists. So, should you pour your money into stocks? You can probably guess the answer. It's not as simple as the US media makes it out to be. What will you do with all this information if you don't understand the rules of the game? You'll lose money. But if you understand where the money is going, you can turn risks into opportunities. 2025 will be a year full of volatility, but for those who think clearly, it could be a once-in-a-decade opportunity to build wealth. Are you ready to seize it? So, in this context, what should we do? Many people are worried about the collapse of the US stock market, the devaluation of the dollar, and the erosion of asset values. But remember, financial markets always move in cycles. When some people lose money, others are making money. The key is whether you know where the money is going. Right now, institutional investors and major funds have already prepared themselves. If you pay close attention, you'll see that experienced market players are not panicking. They have already anticipated the shift in capital flow and are proactively adjusting their investment portfolios. In fact, when the market crashes, that's often when the best opportunities arise. Think about it when stock prices drop sharply, but the US continues printing money and expanding its balance sheet. What happens next? New money enters the economy, inflation goes up, and eventually money finds its way back into the financial markets. Those who are patient and alert will be able to buy stocks at rock-bottom prices just before the market bounces back. That's why Warren Buffett always says, be greedy when others are fearful. But the big question is, what types of assets can serve as safe havens? During this period, the most important question is, if you don't want to hold dollars, US bonds, or risky stocks, where should you invest? Here are some types of assets that are likely to benefit from the coming economic environment. 1. Gold and precious metals. Gold has always been a safe haven when the dollar loses value. As the US expands its financial balance sheet and more money circulates in the economy, gold will become a more attractive asset. Historically, whenever central banks printed more money, gold prices surged. 2. Commodities and energy. Even with the rise of electric vehicles, oil remains a key asset. While US shale oil production might temporarily lower oil prices, oil exporting countries like OPEC can still control supply to keep prices stable. In addition, essential metals like copper and lithium, used in green technology and EVs, will also be assets to watch. 3. Real estate in strategic areas. While commercial real estate may be collapsing, there are still types of property that can benefit. Areas with rapid urbanization and high housing demand still hold growth potential. Especially in developing countries, investment capital may shift toward their real estate markets as the US loses its appeal. 4. Technology and AI stocks. Even if the broader stock market crashes, certain sectors will keep growing. Artificial intelligence is transforming how the world works. Leading companies in AI, cloud computing, and big data may become the next safe haven when the market stabilizes. 5. Cryptocurrency, Bitcoin, and digital assets. Bitcoin, often referred to as digital gold, tends to benefit when the dollar weakens. If you've noticed, every time there's fear of inflation, Bitcoin tends to rise. As the US continues printing money, we could see a new growth cycle for crypto assets. Key investment strategies for 2025. If you want to survive and profit in this market, you can't rely on luck. You need a clear strategy. Here are some basic principles I recommend. 1. Don't hold too much cash. When the US dollar loses value, cash becomes an unattractive asset. Instead of hoarding cash, convert it into real, tangible assets. 2. Don't follow the crowd. Avoid getting swept up by panic-inducing headlines. When the market crashes, many people panic sell, but smart investors use these opportunities to buy in. 3. Invest according to cycles. Every market moves in cycles. When you understand those cycles, you'll know when to buy and when to sell. Nothing collapses forever, and nothing rises forever either. 4. Always have an exit plan. When the market is highly volatile, you need a strategy to protect your assets. This includes diversifying your portfolio, setting stop-loss limits, and not putting all your money into one asset class. The key to success in 2025 is not chasing headlines. It's understanding where the money is going. What we're witnessing is not an economic collapse, it's a redistribution of wealth. Money doesn't disappear. It just moves from one person's hands to another's. Remember, financial markets are like a chessboard. If you don't know the rules, you'll be someone else's pawn. But if you understand the strategy, you'll always be one step ahead. And you'll win. Start preparing now. 2025 will be a year full of turmoil, but also a year of great opportunity for those who know how to take advantage of it. Are you ready? Final thoughts. We've just analyzed 5 types of assets likely to lose the most value in 2025, and the reasons behind that volatility. But always remember, in finance, whenever someone loses money, someone else gains. The problem isn't that the market is collapsing. The real question is, where is the money going? And who knows how to follow it? History shows us that the most chaotic times are often when the biggest wealth-building opportunities appear. The key isn't to panic or follow the crowd. It's to understand how the market works, craft the right investment strategy, and always stay one step ahead. 25 could be a year of major upheaval, but if you're prepared, it could also be that once-in-a-decade opportunity to build wealth and achieve financial freedom. If you found this podcast helpful, don't forget to hit like, subscribe, and turn on notifications so you won't miss any of our future analysis. And please share your thoughts in the comments. What do you think will be the best asset to invest in for 2025? Thanks for tuning in, and see you in the next episode.